Ryder, bringing you the latest in my series of good news bulletins. And today, the latest data on house prices was published by SQM Research, and that shows that in the past month, house prices nationally have risen 0.4%, while apartment prices nationally have risen 0.6%. In terms of the individual cities, 6 of the 8 capital cities have recorded growth in their house price indexes in the past month. The biggest increases have been in Canberra, which is up 1.1% in the past month, and Perth, which is up just 1.0%. The only cities to record falls in house prices are Sydney, down 0.4%, and Melbourne, down 1.5%, but Melbourne did record a monthly rise in apartment prices, up 0.7%. So Brisbane, Perth, Adelaide, Canberra, Hobart and Darwin all have house prices rising to some degree in the past month. In annual terms, all of the capital cities except Darwin have house prices higher than a year ago, with Sydney still up 12%, Melbourne up 10% and Hobart also up almost 10%. Nationally, prices are up 6% for houses and 4.5% for apartments. So the housing market overall continues to resist the negative forces of COVID-19, and to date we have seen no sign of house prices falling off a cliff, as some economists have predicted. Although, notably, some of those who predicted falls of 20 or 30% in house prices are now retracting those predictions and are now forecasting much more moderate outcomes for house prices across Australia. Now, a new report reveals that many Australian millennials are leaving the big cities for life in the regional towns. New Regional Australia Institute research released this week shows that regional Australia has attracted more young people than it lost to the capital cities during the last 2 census periods. A report called The Big Movers, Understanding Population Mobility in Regional Australia shows that 1.2 million people moved to or around areas outside the capital cities between 2011 and the 2016 census. While nearly 180,000 millennials moved to capital cities in the 5 years to 2016, more than 207,000 moved between the regions. The Gold Coast, Newcastle and the Sunshine Coast were among the hotspots attracting young Australians. Other regional cities with facilities such as airports and universities also reported higher inflows, with housing affordability, rapid career advancement and lifestyle choices amongst the key factors. So that trend towards living in the regions has picked up pace in recent years, with more and more people taking advantage of technology and improved transport links to live and work outside the big cities. And we've seen a big uplift in property markets in places like Ballarat and Bendigo near Melbourne, and Wollongong, Newcastle, the Central Coast near Sydney, and the Sunshine Coast near Brisbane. And I think we're going to see the trend become even more pronounced because the COVID-19 lockdown period forced many people to work from home, and some will seek to make it a permanent arrangement. So this is one of several reasons why I think investors should be more focused on good regional centres that are within striking distance of the big cities. Last week, as auction volumes increased across the combined capital cities, so too did the clearance rate. There were 1,262 homes scheduled for auction last week, and they returned a preliminary auction clearance rate of 66%, and that was up from the 63% preliminary clearance rate the previous week from 1,181 auctions, but was revised down to 59% when all the figures were in. So more properties were put to auction compared to previous weeks, but the clearance rate rose, and that's more evidence of the resilience of property markets around Australia at the moment. Both Melbourne and Sydney's preliminary clearance rate came in above the mid 60% mark last week. Melbourne returned a preliminary success rate of 66% compared to 61% the week before. Sydney's was 68.5%, up from 67% the previous week. Amongst the smaller auction markets, Canberra sold 70% of the homes auctioned, but in Perth only 20% of auctions recorded a successful result. The latest figures also show that many vendors are selling their homes quickly before auction to take advantage of buyer demand for the small amount of stock that's on the market at the moment. Now, we recently saw the publication of the latest vacancy rate figures, and these show that nationally the vacancy rate fell in May to 2.5%, which was down slightly from 2.6% in April. The figures from SQM research showed that 6 of the 8 capital cities had low vacancy rates, somewhere between 1.2% and 2.5%, which again is a remarkably solid performance in the current circumstances. Melbourne is slightly above 3%, while Sydney is the only city with a major vacancy rate issue at the moment. It's now up to 4% overall, and the Sydney CBD is much higher than that, up around 16% according to SQM research. And one of the notable things about vacancy rates is that most major regional cities still have very low vacancy rates, other than those where tourism is a key industry, like the Gold Coast. A report by the National Housing Finance and Investment Corporation's new research unit has found that construction of homes offers the second largest boost to the economy amongst all the industries in Australia. It found that for every 1 million of residential building construction, 9 jobs are supported across the country, according to analysis in the report Building Jobs, How Residential Construction Drives the Economy. This report also found that each million spent on residential construction also saw 2.9 million spent across the broader economy. So for each new home built, which costs on average $320,000, 3 jobs will be supported on average across the economy based on current costs. Residential construction has one of the highest multiplier effects of any industry, meaning economic activity has a large spillover into other industries and makes a large contribution to jobs and GDP. Only non-ferrous metal manufacturing was higher, with residential construction third and second, non-residential construction third. And all of that makes the new $25,000 grant for new home builds from the federal government all the more significant. We continue to see reports of big activity at residential land estates across the country as first-home buyers and others seek to take advantage of the government handout. So overall, plenty of good news out there for residential real estate across the country. That's it for now. We'll do another good news bulletin again soon. Bye for now.